Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, see how that impacts the overall markets with some market analysis. Looks like I got to fix the camera to stop trying to refocus. All right, don't forget to smash that like button before you go and subscribe with the little bell because that'll tell you when I'm unannounced, like in these videos. As a matter of fact, yesterday, life happens. My webinar went off a little bit early because I had to do some things. So we got that going. But we do get that content to you. Just a matter of timing. All right. So without further ado, let's get on with the economic data, see what's going on around the world and how that's impacting the overall markets. Across the pond, really not a whole lot of new economic data here. We did get our PPI yesterday that came in line with expectations. I think we talked about that, and the core PPI, which is producer price index, with stripping out some of the more volatile aspects of that economic data point, like food and energy. That number came in a little bit lower than expected at 0.4%, expected to be 0.6%. So producer price index, a little bit lower. Are they going to need to pass those higher prices off to the consumer? It looks like that's being passed on pretty easily. And then here in the United States, we got our importer prices. That came in a little bit hotter than expected, came in unchanged, expected to be 0.6. So producer price index across the pond in Europe came in at negative 1.8, expected to be a negative 2.1. So a little bit better on that aspect. So what are we seeing here? We're still seeing continued manufacturing going on. We're seeing a lot of movement there. We're seeing higher prices getting passed on to the consumer. So, while a lot of folks are seeing layoffs and things like that, as people are preemptively laying off ahead of a possible slowdown here, we're still seeing the manufacturing do very well, or at least push forward based on what they're seeing as demand. So a little bit of a disconnect as to what's going on in the overall markets, what people are speculating going forward, and where we really are is a real disconnect, to be quite honest. Let's take a look at the overall markets and see where we're at. We got a lot of drama going on, continued with Elon Musk, as a matter of fact, continues to talk about Twitter and the purchase of that. It's not gone through. He's still trying to be active, doing his due diligence. One of the things that's brought Twitter stock down this morning, as a matter of fact, let's just pull it up since I'm talking about it. Twitter stock is trading about 10%, maybe even 12% lower pre-market right now because of what Elon's been talking about, the due diligence, the amount of folks out there that are not bots. I guess there's less than 5% that are bots, really. But the fact of the matter is he's pricing Twitter based on real active users, and these bots aren't considered that. So he's maybe leaning towards trying to renegotiate price here based on that many less real users, if you will. So you can see that we're trading about maybe not even quite 10% lower now. It's getting a little bit of a bump, but a lot of that drama going on. Is Elon going to walk away from that? What does the valuation mean if there are all these bots, all of that stuff going on? So a little bit of drama continuing on today with Twitter. It's down a little bit. It's not going to drag the broader markets down, but we can take a look at crude oil here, still seeing demand. As far as I'm concerned, folks, with what we're seeing here, crude oil is exacerbating crude oil prices right now with the lack of supply coming in. The government not allowing new permits to be issued for fracking or digging new wells. That is really driving price higher here as folks are looking at the limited supply. Now, another thing is the NOPEC thing that the administration is coming up with could even make that more difficult for us to purchase oil outside the United States. And if we're limiting what we're actually producing here, that's going to drive price. Some folks are even saying somewhere between 200, 250. Goldman saying 130. That's, pretty easy number to pick. But at the end of the day, if we're starting to see these massive pullbacks on what we're allowed to buy and where we're allowed to buy from, could really start making crude oil prices get wanky. bonds last couple of days had some moves to the upside. I think it was more of a flight to safety as we were seeing equities really sell off. Not seeing this flight to safety here in gold, which is normally what we would see, as it is a retainer of value, strengthen the dollar, all of that jazz, causing a little bit of downside, but it shouldn't make it fall out of bed like it is right now. I would expect that folks would be parking money here rather than just sitting on cash. And that's what it feels like right now, is folks are sitting on cash. Bitcoin getting a little bit of a bounce here. There's been a lot of folks talking about the cryptocurrencies right now and how they have the staying power over gold, even the dollar. Not really seeing that. Folks aren't really buying into that, other than the talking heads on TV. Now we're getting VIX to come off a little bit because we're getting another bounce off this morning open, coming into the open anyway. We can see it looks like a little bit of a turnaround, if you will, where we've been selling. Looks like a turnaround opportunity. I'm starting to feel like we're getting to that point where the market is finding a bottom here. We haven't found a Fibonacci. The next Fibonacci, or the next leg down, is 11,250. We've talked about that here in the NASDAQ. Is that going to come in? When we kind of play around with these middling areas, you kind of expect it to go there, but we've gotten some incremental buying areas where we've seen the market really come in and try and slow this momentum down. There've been a couple of dead cat bounces here where it looks like we're going to turn around and haven't. Now, this is the third time we've done that. Are we going to bounce? I feel like there's at least some opportunity here to start looking to add to a portfolio by selling some puts. Now, I've told you folks that, hey, let's hold off on this until we start seeing some real strength start to come back into the markets. Well, at the end of the day, we can't find the bottom. It feels like we're catching a falling knife and all of that, but we have to be a little bit diligent, step out and test the waters every once in a while, add a little bit. We can't always grab the bottom, but sometimes we can start layering in and do dollar cost averaging with some of this stuff. That's what I would be looking to do at this point, not going in full tilt. I wouldn't even go in a full tranche normally here. I would be going with a smaller tranche than what I would normally do. So, if you're used to doing 500 lots in stock, I would be looking to do 100 lot. And hey, even right now, if you can go outright and buy stock, you can buy less than 100 lots these days. That's not necessarily what I suggest doing, but that is a possibility there. With the new way that we can buy and sell stocks. Dow Jones Industrial Average, this is the retainer of value. I think this is going to be the one that really starts showing strength in the economy first. So if you are looking for a turnaround from this bearish moves that we've been having in the equities, I would look for the Dow Jones to start showing the strength first before I start jumping anywhere close to something like tech. We want to be in things that are blue chips, things that are boring stocks, if you will. Get out of the ones that are the high flyers, because those are the ones that are going to fall flat first. So Dow Jones Industrial Average is where I would start to look for value at this point. But all across the board, we're getting equities showing strength heading into a Friday. Now, a Friday with unknown is a little bit concerning, because that would tell me that it was more of the folks trying to catch that falling knife, propping up this market ahead of the weekend with all of that unknown. I think that we're going to see that the institutional money will be probably putting selling pressure on heading into a weekend. They do not want to have unhedged positions with what's been going on in the world these days. So I would be very leery of jumping on board with any type of buying heading into a Friday. As a matter of fact, you can see what's been going on. It's the same market action the last 3 or 4 days, where overnight inventory is getting very long. We come in, institutional money starts selling. So be aware of that today, because those guys don't like having money on the table, really, with all of this unknown that's going on. So keep your eyes out for that going forward today. With that said, I don't really have anything other than we did talk about the short put spread yesterday. Had a great strategy around Apple. Now, if you like Apple, this is an opportunity where we could take advantage of that. It's trading a little bit higher pre-market from where we were. But again, these were levels that I was looking at, the 137 area. We can get below that, start selling the 130 puts right now because of this sell-off with the real high volatility here. We would expect that to roll over. That's the opportunity to sell high, buy low. We talk about all those levers and pulleys in these webinars. So please go to Pro Trader Strategies. Check that out. You can find us on YouTube and Facebook. All right. That's all I got for you. Other than if you can't take that, take it easy. Have a great